at which you want to sell. It took us up to 1 week to find a willing buyer. We had to even adjust our rates. And I had to go to the CBN website to take the selling rate at that point for Friday before that conversion. And I wrote to the bank that I want to sell at this rate. It took the bank up to 5 days to get me a willing buyer to buy the FX that I had to sell. So yes, we are here now. Willing seller, willing buyer. That is what the model is now. So the US dollar is one of the most traded paper in Africa. You buy almost everything with dollar. So how is the CBN policy affecting you and your business? That is our discussion this evening on Ask the Accountant. If you are here on Zoom, on Facebook Live, thank you for joining us. Welcome to today's live section on Ask the Accountant. So today our guest is Uchechukwu George Iwago. He's a wealth and investment management professional with extensive experience in financial advisory, group strategy, financial planning, and business partnerships. He was my manager at ARM when I was investing with ARM before he moved to where he's working now. He has a diploma in economics, a bachelor degree in accounting, and currently pursuing MSc in development economics. He manages over $50 million in assets under management. Management, joy analysis, market trends, for startups, individuals, companies, and NGOs. So today he's talking with us on the demand and supply of dollar. Now, reading from Punch Online, I saw a post by Eze talking about the multiple exchange rate regime and how the rate created room for, rent-seeking and arbitrage. How distortions was seen in our rate management across board, in the system. Where people who have access to central bank or who have favored in the government, they have access to exchange rates at a subsidized rate, which is not the same thing that the general population have access to. So it created room for disadvantaged population in Nigeria, and it's against our constitution of equality before the law. So people are favored to buy dollar at cheaper rate from CBN and now sell at a higher rate to the public. Now, the key advantage of the new regime would include the fact that any foreign exchange income to the government would not be monetized at the new unified rate, which is far higher than the old central bank rate of about 4.35 to $1. So this means that more resources will be available to the 3 tiers of government for developmental action. Now the point is this helping us? When they announced the willing buyer, willing seller model through the I&A window, which was first of all introduced in 2017, 21st April. Now it is back. Now, what it means is that the Naira is floating, and the policy has collapsed all exchange rates, platforms into one window where the willing buyer and the willing seller will do business. And the IMF has come up to say, okay, yes, we back up this policy because it's going to help, Nigeria to develop and to grow. So now we are here to listen to George. What is happening? USD is a very strong currency that almost everybody in Africa uses to. In fact, in Africa, African nations use USD more than they use their own currency. Unlike the euros in the European Union, where they trade with euros. But in Africa, we trade among ourselves in dollars. How is this free floating exchange rate going to help businesses in Nigeria and individuals? I'll hand over to George, take it from here and discuss the impact of USD on Nigerian economy. George, over to you while I share your screen.
All right, thank you very much, Uma, for having me. I hope you can hear me very clearly.
Loud and clear.
You are very clear, George. Go ahead. You are very clear.
All right, good evening all. Thank you for having me here. This is a good opportunity for us to actually talk about what bothers us as individuals, even at the microeconomic level and at the aggregate level as well, because this is quite topical. So as I speak, also one of my mentors, Professor Ekekwe Ndubisi, is actually speaking to another audience today with an opposing view and postulation, which I think a couple of days ago, I also shared it with us here so that we can also look at his own side of the story, you know. So quickly, we already know, like Omar rightly mentioned, that the US dollars, in fact, if there's any word like the African economy has been dollarized, that's what actually that is actually the right description for the situation. But the big question now is, why is the African economy, you know, tied to dollars? Now, this is not a big deal. So I think we'll go to the next slide. Great. So the big question is understanding the impact of USD on the African economy. You know, so the African economy is so dollarized, like I said earlier. You know, the reason being that, like Omar has also mentioned, that we trade with the USD more than even our domestic currencies. And that is because, one, the African economy is exposed to huge dollar debts, you know. So according to numbers from the United Nations Conference on Trade and Development, you know, African countries have, you know, they have a standing dollar debt of over $460 billion. And of course, when you have these debts, you know, from IMF, from a World Bank, from Paris Club, and name them, you know, so you're not going to pay them back in your own domestic currency. You also have to source the USDs to be able to pay. And of course, when this happens, you know, you ensure that you have ways and means to actually raise the currency to be able to pay those debts, you know, because it's actually critical to their economy. So if they actually stop those capital flights coming in, is going to distort the whole of the economy of Africa. So that is why this is very critical. And secondly, you realize that key essentials like energy and food, you know, actually priced in dollars. So making the dollar a global currency, you know, so that's not just about Africa, but it's across the globe, you know. So a couple of nations like Russia and a few of them, you know, have come to see how they want to break what they term the petrodollars, you know, so that also we at the height of the Russia-Ukraine crisis, at some point, Russia even told some of the buyers of their cruise, look, if you're going to buy and pay us in rubles, we are going to actually give you a huge discount. So we saw countries like India, you know, and then and Czech Republic going to actually buy in Russia's domestic currency, you know, which is actually the biggest hit, you know, in recent time against the USD. And then thirdly, you realize that because the global economy, especially frontiers, you know, because Africa is not really an emerging market yet, we are more like a frontier. You know, you get the frontier market, the emerging market, and before you get the developing and developed markets. You know, so the frontier markets like Africa, even the emerging markets, you know, have a recourse to the US central bank, which is actually the US Fed. So you realize that a couple of course, the US Fed has always been increasing interest rates. So what this means is that if there's an interest rate hike in the US, it means that the investors in US will rather go to, so let me take a typical example. So Nigeria is offering, maybe is returning, say 8 or 9%, you know, on investments, FDIs or FPIs investment, you know, for foreign investors. If the US increases their rate, you know, to say maybe 3% or 4%, those investors will rather go back to invest in the US, you know, because the economy is more stable, the policies are something they can relate to it, you know, the tax the policies are good and sound, unlike Nigeria that has a lot of deep structural issues when it comes to even policy and all of those. So what frontier markets like Nigeria does, if there is a hike in, if the Federal Reserve Bank hikes their interest rate, in Nigeria here, there has to be a counter hike in the rate, to be able to match, to keep those hot monies, that is coming from foreign investors. So basically what this is actually a double whammy, because I say this because one, the domestic currencies are already suffering because of lack of USDs. And then if there's a hike in the US currency, and then instead of to forestall the exit or repatriation of capital from frontier markets like Nigeria, rate has to be hiked as well, so that to keep the foreign investors happy, And when that happens, the already weak currency, domestic currency, will be weakened more as a result of that hike in rate. And that's what has always been happening, to show how strong the US dollar is against other global currency, especially in Africa, where our debt is so huge, well, nearly $500 billion in debt alone in USD. So, but the long and short of this is that all the main currencies across the world, the yuan, the Dutch mark, the euro, the pound, and even the USD, they get their strength from policy and trade. That's the major drivers of these main currencies. That's why I kept it there, so that everybody will know that that's actually what strengthens in any currency: policy and trade, policy and trade, policy and trade. So I haven't talked about Africa, so I'm just trying to get to the genesis of this issue. So why is there devaluation? Why is there? Why are we using so much monies, well over nearly 800? Because even in the peer-to-peer window that Omar has just mentioned, the last time you can even people buy at 810. So why is there a rush to hold the greenback, in Nigeria especially? Now, of course, we'll look at the supply leg. So because there are two ways to, there's the supply leg, there's the demand leg. We already know that from Nigeria, how do we get, what is our source of USDs? Number one is revenue from crude oil, right? So we sell crude oils and then we get paid in USDs, like an export. So unfortunately, the export of crude oil actually accounts for over 90% of our revenue. Meanwhile, it contributes only 10% of the GDP. That's a bit crazy, right? So that's the number one source of USD, of foreign exchange and currency in Nigeria. Number two is the non-oil export. The agricultural produce. So you have the commodities, the raw materials, the assessment seed, the zobo leaves, and all of those stuffs that we export, constitute the non-oil side of the export. That is also a way of the country earning, there's a foreign currency or the USD. And the third is FPIs, foreign portfolio investors. So these guys come into the capital market, with a stock of dollars, and all of those to actually trade and make revenue in the country. So of course, there's a lot of issues around that as well. So you have the airlines, they've come to the country and then they want to repatriate their funds back and there is no dollar to pay them. So some of them are even reverted to saying, look, you're not buying our ticket anymore in Naira. If you can't source for the dollars to actually buy tickets, you have to look elsewhere. Then the second source of supply for USD is the FDI, foreign direct investment. So basically, these guys come, the money is actually not very hot as FPI. And then the last but not the least, diaspora remittances. Our brothers, family, and friends that are abroad, they send monies to their loved ones in Nigeria, and that is another source of inflow, of USD into Nigeria. So basically, when you look at this, and I believe that is where I have a slight divergence from the view of Professor Ndubisi Ekekwe, because so looking at, we believe that the devaluation or the weakening of Naira in Nigeria is as a result of distortion or weak supply of USD. But that is, I think we'll speak to that in the next slide. Then on the other side is the demand leg. So what is the need? What sectors are actually demanding for USDs, for FX in Nigeria? One, of course, raw material import. So I'm sure a lot of people might not know this, but we also import a lot of raw materials. So like the grains, we import a lot of grains, and from the US, for the cereal and all of those stuffs that the likes of Nestle and all of them uses to produce locally, and then of course finished goods. We all know that, So then, of course, for services, the people paying school fees abroad. Of course, last year we spent over $3-something billion on school fees alone in Nigeria. That's crazy, right? For health, a lot of people also go to do their checkups in the US, give birth in the US, and all of those. Dollar is actually required locally to be able to do that. Professional services, of course, so you need all of those services, and then you're paying in dollars. Then semi-parts. So most of the so-called cars that is manufactured there locally, almost all the parts, in fact, not almost, all the parts are imported, and then they just do coupling here in Nigeria. So some of you are my friends, my customers in Navy that manufactures the bike, these bikes that we used to do delivery, that's all over the place. They bring virtually everything, import virtually everything, and then couple here and sell. Of course, expatriates, we bring them in the health sector, in the education sector, in the oil and gas sector, in the fintech, they come and then they'll be paid in dollars. So all of this is the demand that is actually chasing the limited supply that we have of dollars in Nigeria. So let me just draw a scenario. In 2014, I'm still on that slide. So in 2014, so we had FPIs, that's a foreign portfolio investment into Nigeria at $20.7 billion. $20.7 billion. At that time, exchange rate was 160 Naira or 162 Naira, thereabout. As at 2022, we had FPI in Nigeria, that is foreign portfolio investment into Nigeria, stood at $5.3 billion. The difference is over $15 billion. And then you realize that while our supply of dollar is actually decreasing, because our GDP is also growing, the real sector is growing, there is manufacturing, there is a lot of economic activities going on because our GDP grew slightly post-COVID, way post-COVID, of course. And then you realize that when the GDP is growing at that rate, the dollar need is increasing as well, because people have to import raw materials, people have to import finished goods, people have to improve their skills through education, health, professional services, semi-part, expatriates are being paid in dollar. The demand is increasing by the day while the supply is limited. I just gave you one example that FPI, foreign portfolio investment in 2014 was about $20.7 billion. In 2022, it reduced by well over $15 billion, while the demand for dollar is growing. So if you look at this scenario, it's easy for you to say that actually the reason why there is a devaluation of the Naira is because, or the reason why we're having high demand for dollars while the supply is low, and then the price is, of course, going high. That's elementary economics. If demand is higher than supply, price will spike. That is simply the reason why we're having the crisis. People can't access dollars anymore. But I'm not going to speak to that. So we already have the slides, so we can look through it. So because that is our major earner of FX in Nigeria. So when there is an issue in the crude oil prices, of course, the supply leg of USD of FX in Nigeria is going to be affected. Now, if you look at the reserve, the FX reserve that we have, which is actually on the second slide, you realize that it is decreasing. And the reason why the foreign reserve is decreasing is simple, because of the free float. So now, of course, there is they've taken out the black market operators, and what is now left is the I&E window. And they have a lot a backlog of requests for FX that hasn't been satisfied yet, and that is going to be done, of course. And all of these monies is not coming from the sale of crude oil, which is our main source of FX revenue, but they're also coming from the foreign reserve, that the FX reserve that we have as a nation. So that explains why there is the FX reserve is depleting by the day. So back to the gist, where it affects us as individuals. What does the float exchange rate mean? So this is simply when CBN authorizes commercial banks to freely trade FX, the value will then be determined by forces of demand and supply. So before now, the CBN used to make sure, look, they pegged the FX price, at a certain rate, and nobody goes beyond or above that. But in this free float, what they've done is they allow the demand and supply to actually determine what rate you can actually sell your FX to a willing buyer. So the two of you can decide what rate you want to buy. If you agree, the transaction is consummated. Now, so looking at this before now, why was there a BDC or the Abokis in between the official rate? Because the demand was so much and then supply was low. The banks were not able to actually satisfy the demand for FX at the time. Therefore, it created naturally a different industry, if I must call it so. So for people to actually make money. And like you rightly said, a lot of them go to get it from the CBN, get it at the CBN rate, and then sell in the black market and make a lot of money, which we are going to talk about in the next slide. So who are affected by the free float policy? One, businesses. So because of the free float, there's also going to be, importers who actually have to suffer, because of course the cost of importing equipment, the cost of importing raw materials will be on the increase, and of course they will simply push that to the final consumer, which is going to spike prices in the market and worsen inflation, which is what we're experiencing. The last rate was above 22 or 22.3%, which is inflation rate. And of course, that's going to hurt also export-oriented businesses, because of course you're sourcing and then. So for instance, let me just quickly say this, some organization at the height of the FX challenge, what some organization does is that, of course, you know that there are some agricultural produce that we export. So what some guys now do is that they go to those farmers in the north, you know, that want to export the sesame seed, the zobo leaves, and what have you. So they buy those stuffs from them, you know, and then export to the US and then get paid in dollars after like 90 days, and then use the dollars to actually do their businesses. So they won't have to wait for the CBN. And that was a smart way. That was a smart way to go about it. You know, simply go there. Look, you have a lot of guys that want to export stuffs, agricultural produce, you know, from the north and wherever. And then you buy those the produce from them, and then you export and then get paid in dollars. And then the dollar is actually not sold, is actually used for the business. Because of course, what's the difference with having to go, you inflow Naira into the bank and then you wait for more than 180 days for the bank to actually give you, you can inflow 200 million and they'll be giving FX in piecemeals, a 10,000, a 20,000 if you're lucky, you know, while you're waiting for over 6 months. For that period, for 90 days, they can actually do that export quickly, get paid after 90 days when the goods is confirmed. You know, of course, they had challenges with packaging, you know, so just get an agent is somewhere in Mexico or so, the guy packages and then sends it back to the US, you know, and then pay them after 90 days in USD, in dollars, and then they deploy the FX to actually run their businesses, you know. Of course, this is also going to affect the BDCs, you know, because now with the floating rate, you know, so the middleman, which is the BDC, is totally cut off now. Because why are you actually going to the BDC? But the truth of the matter is, at some point, we envisage that the banks will not be able to meet the demand, and that is also going to push people to the BDCs, you know, and definitely they are still going to offer something slightly higher, you know. They are still going to sell FX at a slightly higher rate than what the banks are selling. So which is what we expect to happen. But of course, it's bad market for the BDCs, you know, because before now, of course, this also will cut off the arbitrage, you know. So basically, there what they were doing is that they get FX from the CBN and then sell it at the black market and make a huge kill, you know. But now with the unification of rates, that business is not going to be viable anymore. You know, there's not going to be any business for them, you know. So if you notice now, there's a reduction in requests for PTAs, BTAs, visa fees, and all of those things, you know, because most times people just get it, but of course there's a genuine reason to actually there's a genuine visa issued, you know, and then, but they still get the FX and then sell it at the black market for a kill, you know. But for now, with the unification and the floating rate, that is not going to happen anymore. So people that has a genuine need for school fees, BTAs and PTAs will actually go to the I&E window and they won't send this into the banks and get it, you know. But you're definitely not going to sell it, because what you're going to get from the bank is definitely what you're going to also sell if you want to sell, you know. So it doesn't make any sense for them to actually buy from the banks or through CBN and then go to sell in the black market, you know. So, but the biggest winners in all of this will be people that have brothers or sisters abroad. I say this because for those guys, Christmas has come very early for them. So your brother sent you $100 or $200 from the US, and you smile to the banks at 800 or 736 or whatever the current rate is. So they are the guys that's actually going to be enjoying, people that has diaspora friends, families that send them money. Now, so this brings us to the question, a willing seller and a willing buyer. So of course, this has always been there, pair to pair. So what this means is that, look, you have, and then the banks have actually used, is now a strategy to actually completely cut off the BDCs. So because the BDC have a sizable portion of USD business in Nigeria. So what the banks have said, look, why would you want to go to the BDCs to sell your dollar? When if you have a DOM account and you want to sell every single day, just tell them, look, I have FX for sale. They quickly connect you with a buyer, and all the banks have started doing this. You realize that the BDCs have been taken out of business, automatically with this. Because if your bank can actually sell and buy at the same rate that the BDCs are going to also buy. So why do you want to go to the BDCs and risk losing your monies or any of those risks that's associated with companies that are not very institutionalized, So that's the way, and the banks are actually the strategy is gaining traction within the banks, So that's pretty much. If we have a question, I can take it. If not, we'll go to how do you actually hedge against devaluation of the Naira?
Okay, thank you, George, so far. Please, if you have questions, you can drop on the chat box so that we can take your questions now. So I have two questions so far from one of the participants on the call this evening. Before we proceed, to throw in some banters, it means that small me can just tell the bank, I have £10 to sell. Please help me find a buyer, and they will help me find a buyer because I'm now the BDC. So we are all BDCs now. You just tell the bank, I have my £10 to sell. I need a willing buyer. I'm a willing seller. Okay, so the first questions I have is talking more around, just a second, let me get the questions. You can throw more light on the FPI. They want to know more on the FPI. Before I get the other question, just throw more light on the FPI. George, please, over.
Okay, yeah, so the FPI are foreign portfolio investors. So for instance, post pre-election, there was a lot of sell in the stock market, is a signal that the foreign investors are actually leaving, to go to take other positions elsewhere until we finalize the election, because there is usually a very sharp policy change with administration in Nigeria, and most times. Of course, it also happened when the US also hiked their rate. The US Fed hiked the rate. So if someone is going to get 8% in the US and then they are offering you 8% in Nigeria, where the policies are not so deep, infrastructure is not so stable and all of those things, you definitely want to invest your money in what is assumed to be a safer climb, for your business. So basically, that's what happened. And then we saw a lot of capital flight, which is usually the case when US hikes their rate, the US Fed hikes their rate, So the FPIs are foreign portfolio investors, So they come in to look at any sector of the markets. They actually play within the capital market, where you buy shares, you raise commercial papers, you raise Euro bonds, that's in dollars, those debts in dollars and all of those things. So that is where the FPIs play. It's a direct opposite of FDI, foreign direct investment. So for the foreign direct investors, they spotted out a particular sector they want to play. They come to Nigeria, put the monies down to create a business, the likes of ShopRite, the likes of Mandarin, the likes of, so these companies, so they spot a particular sector of the Nigerian economy. They come down to actually build companies as against FPIs that just invest in shares, stocks, bonds, and then they take their dividends, and then when the investing climate is not so favorable, they pull their monies immediately and then move to another country, maybe Ghana, maybe Senegal, or back to the US, to invest. So those guys, so we call these monies hot monies, because those monies doesn't stay. And every African country that have FPIs, they do everything to ensure that they please them to stay on in the market, because if it means even hiking our rate, that is why when once the US central bank or the US Fed says, look, we're increasing our interest rate to say 4%, Nigeria will do a counter increase at 8% to ensure that these guys stay on in the market.
Okay, so George, just to cut it short here, sorry about that. So let's come back to the rates issue. Somebody was also asking, what do you mean by when you say hiking rate? In terms of dollarization of the African economy, when you say the US can hike their rate, what rate are you referring to in this place?
Okay, in that case, I'm referring to interest rate, returns on investment.
Okay, please go ahead, George.
So when I say the US is going to hike rate, I mean interest rate, like returns in the money market fund. I'm just using this as an example. So for instance, you can have the money market fund returning maybe 10.5% today, and then tomorrow it goes high to like 12%. What it means is that you're now earning 10% on every investment that you have. So US can also decide to say, look, we are going to hike rate, and then that's basically what I mean.
Okay, thank you. So just two more questions before I'll ask you to conclude. The first one again is just based on what you said about the BDCs, does it mean that the business is over for Aboki BDC guys? Is it do they have opportunities in the market, or is it that there's no more business for them? That's one of the questions. The second question is, how does it affect TotalWave that previously helped to pay fees? Does it mean that now their rate will be same as the bank since it's floating rate? Does this also mean that BDC rate and bank rate will almost be the same thing? So those two questions are almost the same thing. You can go ahead with those questions, please.
Okay, so the main reason why the BDCs are actually in the market was because of the demand for USD, right? And then because there's a demand for USD that the banks could no longer meet, so there has some importers will have to go somewhere else to try to get FX for their businesses. So that is actually what created the parallel market, the black market, or the Aboki as we call it, And now what they do is that the Abokis also have, of course, we know that at some point the CBN was issuing dollars FX to the Abokis, and then the banks does not have enough, So, but now the Abokis, of course, the banks are now competing directly with them because they have the same rate. Before now, of course, the banks had a better rate, but the banks were relying on CBN to give them funds. Right now, CBN is giving funds to only the banks. I hope they start to give to BDCs. If they do, there's going to be a business for them, except they are going to devise alternative ways of assessing FX, which they can now sell back to the customer. Of course, the peer-to-peer, which you call the willing buyer and willing seller, you can actually have the USD and you so approach an Aboki to say, look, I also have a FX and I want to sell. If they cannot as well get you a buyer. But people is more convenient in the banks, because you have your DOM accounts there. The buyer and the seller obviously will have account in the bank, and then even if you don't have it in the bank, it's easier for them to actually put a lien on this transfer and then ensure that everybody gets their naira. It's safer and more convenient for people. So that's why people will actually do that, and that's what the banks are capitalizing to increase, to try to take the market share, away from the BDCs and their bookies, That's so for the likes of FloaterWave and the other payment systems that issue dollar, they are going to revert to the floating rate, where you and them agree on what rate to sell. That's the beauty about allowing market forces of demand and supply to determine how much you sell and buy your FX.
Okay, thank you, George. Before I ask the other questions, just continue with your presentation so I can try to round up as soon as possible. Then I'll ask the remaining questions that we have on the platform.
Okay, so my last slide is, so why people that still have a stock of dollars, within their reach, of course, people that have liabilities as well in USDs. So this is actually my last slide. So the question is, in the face of a devaluation, how do you hedge against a devaluation? How do you hold your assets to protect it against devaluation? So a typical example would be, so somebody that had, say, 20 million naira when FX rate was 460, and then he can actually get, this is just an instance now, let's say he can get $10,000 or $40,000 for his 20 million naira. Presently, the same 20 million naira will give him about half of that money, so maybe $10,000, So especially for those that have to make expenses in USDs, liabilities in USDs, it can't help it but hold some of your assets, sizable portion of your asset in USDs, where it helps you to return. So what we try to do here is also that, look, we can actually give you for as low as $1,000, you can get between 6 to 8% on your stock of USDs, and this is in a mutual fund. So what we try to do, of course, before you can actually invest in the Euro bond, where the FPIs also play, you have to have at least $200,000. But what we're also trying to do is to design a product that allows retail customers that doesn't have up to $200,000 to actually, that has as low as $1,000, to actually earn between 6 to 8% on your assets, on your dollar assets. What this means also is that this is also open-ended. You can take part of it, you can add to it. The minimum holding period is 90 days. But I must warn you how this thing runs is that because it's also invested in Euro bonds that has prices attached to it and is marked to market. What it means is that, of course, you're free after 90 days to take your money anytime you want to take it. However, it is going to be subject to market rate. So should you invest when the price was $100 in a unit and all of a sudden 90 days later, it has gone to $110, you would have made a capital gain of $10 on a unit. If peradventure also goes down, below $100, it means that you would have taken a hit, or a haircut on the because of the price of the bond, because bonds are at par, at premium, at a discount at any given time, So basically, it's a good investment to help you to hedge against it, so that whenever you need to access your dollars, you can actually access them. And you're also allowed to state any bank account, either locally or abroad, where the monies can be paid into. So that's basically a best way to help you hedge against devaluation. But of course, with the way the price of dollars is going, if you take a couple of dollars and put it under your pillow, it's still valuable, very, very valuable. In fact, I had a conversation with somebody. I told him, look, even if you had like $20,000 and then in 2014 and just put it, dig debt and hide it under it, 4 years later, you would have made a very fantastic investment. So what more is that putting this money in the dollar money market fund, the money is still safe with the same value, and then is attracting between 6 to 8% interest, and it's always accessible to you should you need to use it. That's for me a good way to eat your cake and have it.
Okay, so George, just to talk more on the savings. Before now, most of the motivational speakers and investment analysts advise us to save in dollars or save in foreign currency. So somebody is asking, is it still advisable now to keep saving? I think you've just answered the question in the sense that while saving in USD or in any other foreign currency, you also invest, do investments in those currencies so that even if the exchange rate is fluctuating, you can still make money from the investment. Am I correct, please, George?
Exactly, but I must let me quickly add, so there is also a speculation, not a speculation, a postulation within investment bankers that actually the price of FX that we are seeing now will likely come down. So that is the sharp divide that we have between investment experts here, investment bankers in Nigeria, and what Professor Ndubisi Ekekwe is also postulating in the US. That look, while the local investment bankers think that look, the forces of demand and supply for FX in Nigeria is going to stabilize, meaning that if you actually have Naira now and then you convert it at 730 or 800 Naira, and you within a couple of months, the price is going to come back at just at say 600 or 650. Now, if you look at it from the sense of the supply leg, knowing that this demand, this devaluation, is actually coming because of issues in the supply leg, that is reasonable. But from Professor Ekekwe's own postulation, for you to what actually makes a currency strong is of course there's policy in it, but it's more of trade. So if we get our infrastructure right, begin to move from consuming economy to producing economy, that is actually the best way to actually strengthen the Naira from Professor's own point of view, that we need to get our production running. We need to ensure that there is infrastructure, there is steady power for manufacture to attract manufacturers, there is road, there's other amenities that will help local production. So once that local production kicks off, we'll reduce naturally the number of importation, and we'll see a balance of payment that is favorable for us. We will begin to export more instead of importing more, and that naturally is going to stabilize the demand for USD. But for us here in Nigeria, we're also saying that look, if the issue is supply leg, because like from the example I just stated earlier on, in 2014 alone, we had FPI at 20.7 billion. And in 2022, we had it at 5.3 billion, meaning that the issue is supply. So if you increase the supply, the demand for USD is going to drop and the price is going to stabilize in the short term. So it's just for you to look at it and see for the prof is very correct, and our guys also have a sense in the reasoning that we are postulating.
So George, thank you. My question will actually be around we don't seems to have any stable manufacturing industry in Nigeria. We can't even refine our own crude oil. We import almost everything. So what is your take? Do you see this happen in the next 1 year, where we'll start having a very strong export base and where we'll rely less on importation? Do you see that happening in the next 1 year, George?
Okay, so now, so if there is improvement, in curtailing theft of crude oil and then increasing our quota, of export of crude oil, which is actually our main source of FX revenue, that is going to show up the supply side to be able to match the demand side. And once we can match the demand side reasonably well, we expect that price will come down. But the question is, are we able to actually arrest the issue of theft, issue of vandalism, the issue of militancy, and then be able to meet our OPEC plus quota in crude, And then if we can do that on the short term, yes, the Naira might be strengthened. But on the long run, we need to actually move from consumption to production for us to be able to reduce on the long run the what's called the balance of payment deficit that we're experiencing in the country now. And that is the only way for us to strengthen the Naira. We have to produce. We have to empower the SMEs. That's just the long and short of it.
Yeah, with these multiple taxations, with the issue of power generation, how I don't see how in the shortest of time where we will see SMEs, being empowered. The government I see today, sorry, pardon me, they are more focused on tax revenue generation than supporting SMEs. In fact, with what we are seeing with the new palliatives being proposed to distribute, we are still going to consumption. Instead of finding ways to use that money to develop a sector, we want to still share that money, and still consume that money. So I'm being positive, but at the same time, I'm being realistic. We have a lot of people at the embassy trying to jackpot. They need USD to jackpot, So the demand for USD for now, from my own opinion, will still be far higher than the supply for USD until we fix the fundamental issues with Nigeria, which are, first of all, our refineries. They have to be fixed. I wonder why over these years, we said we'll have the shutdown for turnaround maintenance for over how many years now. We can't still account for the money being pulled into that industry. So we only believe or hope that things will turn out better. But just come back to the platforms. When you still asking the question, what kind of portfolio investment would you advise us to do with USD? Now, I have two questions like that. What is appropriate and safe USD-based investment, that you can do to get returns of 8%? They were not clear about that particular one. And also, another question is, with this floating rate policy now, do you foresee further slide in the Naira, knowing that there's likelihood that demand for USD will keep increasing, because our economy is already dollarized. We need a lot of dollars to operate in Africa. So do you see further slide in the Naira, and what kind of investment can we do in the USD as we try to round up? Over to you, George.
Okay, so like I said earlier, until supply meets demand, the price will always be high. So but I know that if we improve on our supply of crude, which is our mainstay of FX revenue, we are going to increase in power supply, and then that might bring down the price temporarily. But on the long run, there's nothing we can do. There's nothing we can do right now. Yes. Okay, so right now there's nothing that is good as having to improve our production, and then improve infrastructure. That's the only time, because like I said earlier, currencies are driven by trade and policy. So that's basically it. Then for us that has a stock of USDs, so the best is that if you don't have up to $200,000, the second best thing for you to do is actually to put those monies in a mutual fund that helps you earn in dollars, keep your money in dollars, and then give you a competitive rate between 6 to 8%. And you have access to those monies anytime you want to take it. That's just it.
Thank you, George, for...
Sorry, the 6 to 8%, is it annual or monthly?
It's annualized, of course. It's not monthly. No bank rate is monthly. No commercial bank rate is monthly.
Do we have other questions? Just unmute. Is the time to speak now or forever remain? Just unmute and ask your questions, make your contributions as we try to round up. George, have one more slide to talk about. Just ask your questions, contributions, as we try to round up, please. The floor is open. You can still type if you don't want to ask. You can still type if you don't want to speak. But the floor is open. There's a poll going on. Just please answer the questions. Yes or no answer. Just please answer the questions as we round up today's session. George, we wish to conclude your sessions, please.
Okay, so I think I've pretty much concluded, and that's it. So alternatively, I would have said, look, for those that have Naira, because as Nigerians, you are Nigerian that is living in Nigeria, you have Naira liabilities. So you also need to actually have investment in Naira, because you can't help it. You spend Naira, of course, you don't spend dollar. And then, of course, one important thing Prof also mentioned, that he also expect to see shares of Nigerian banks drop, because, of course, Nigerian banks are also exposed to huge investment in dollars, especially in the Ghana Euro bond that we've seen. I can't say it has failed, because there's plans for, of course, IMF has given Ghana almost $3 billion again to be able to actually offset their debt in Euro bond, and then a lot of Nigerian banks are exposed to the Ghana bond. So you see the likes of Zenith Bank making a provision for loss of almost $500 billion. All of those to also cushion the negative effect of the investment in Ghana Eurobond. So it's a tough time to be a human being right now.
It's a tough time to be a human being, but we will survive. Right?
Exactly. Yes, sure.
We are now buying fuel at 540. In fact, the first day I went to buy that fuel, one of my guys on this platform called me and asked me how many liters will fill your tank. It was on my birthday, 5th of June. So I quickly did the calculation and sent to him. He sent me the exact money to fill my tank. That was the only time I'd filled my tank since this new fuel price regime. Before now, I'm very used to entering the filling station. I'll just fill my tank. I don't buy, half tank. I'll just fill my tank, okay? But from that announcement to now, it's only once that I've bought full tank, for my for my car. Ever since then, I just enter the filling station, buy 10,000, 5,000. I buy per use. In fact, I build like I cement these days. I buy per use, hoping that one day it will come down. So it's a tough time to live in Nigeria, but tough times make us better and stronger. This was really a very, very informative section, I must tell you.
Of course, I agree with you. It's only big men now that do fill up when they get to the filling station.
In fact, the big men have packed their big cars and looking for small cars to drive. Big cars now are no longer for luxury. When you think about the fuel, you just find a way to. The poll is still there. I can see some people feeling already. Please try and take that poll, please. It's very important for us and for the speaker as well. So thank you everyone for coming on board. Very insightful. I know there are more things to discuss on exchange rate. The thing is already impacting on us. Like I said earlier on, I tried to convert, for our operations in my project last week, and it was tough to get a willing buyer, at the rate which I was quoted. And I work in an industry where everything has to be transparent, so I have to prove to my head office that the source of my FX was transparent enough. I did not on my own just choose any exchange rate to, quote. I have to go to a source, get that source, quote that source in my letter to the bank to the letter, and advertise on their platform to their customers who is willing to buy my FX. I have to wait for over 5 days to get a willing buyer. So we're already seeing that impact on the floating Naira, on our businesses. And it's going to also impact us more. Yesterday, I saw two alerts yesterday and today on my subscriptions online. One was to OneScribe and one was for, I think, Outlook. I don't even know how they determine the rates. They converted the dollar to Naira. I just saw a lot on on my phone, So we'll see more to these things, and just for us to be careful before you put that your debit card on any platform. Try and do some mathematics. Be careful what you put out there, because this exchange rate is floating. Is floating, and we don't know where the wind or the storm will carry that rate to. Thank you everyone for participating. I hope to see you again next week. We'll discuss next week again. If you want to reach out to George, can call them on the EcoBank for management. That's where he works. He's in the Lagos office now. So call him, talk to them. They can also support you in investment matters for a fee, of course, for a fee. Thank you everyone for joining us today on Ask the Accountant. If you don't have any questions or any contributions, we'll just be cutting here for tonight. And I hope you did enjoy yourself. Please, the poll is still on. I only see 8 persons answer so far out of 22 persons here. Please try and fill and just tick yes or no, and God bless you. Good night, everyone. Have a productive week ahead. See you next Sunday.